Morning, everybody. Mic wasn't turned on. How are we all doing? Happy Monday. Another week, another dollar, all that stuff. How are we all doing? Everyone had good weekends. Morning, Church. Paul, Vitali, good morning. FTNet, Evil, FTNet with his other account. One with a blue star, one without a blue star. That's good. Morning, Forex Fire. Virginia, Jules. Morning. So, it's another week. Bit of a crappy week for news this week. Well, it's not. It's it's busy. We've got PPI and CPI this week, and we've got the New Zealand rate, but it's very compact this week. The entire week fits on half a screen. So we'll see what happens this week. But today is dead. We have nothing. Nothing at all. So if you're watching this on replay, use the comment section if you've got anything you want to ask, and I can answer it in the next stream, or I can answer your comment. Obviously, if you're live, you can chat. But today, no news. So it's a dud day today. So we'll see what the market does today. On no news days, we don't tend to get an awful lot of movement. As you can see, there are no ADRs. So we've had no particularly exciting movement during Asia. Virtually nothing. It's pretty flatline today. Dead. But yeah, we'll see what happens today. Morning, AZ. So today we've got nothing. Tomorrow we've got nothing. So sort of nothing. It's the Australian policy meeting minutes tomorrow morning, but we might get some movement off that. Possibly for the Aussie, but we'll see. So Wednesday really is when the news kicks off, when the market starts to come alive this week with the New Zealand dollar interest rates, which are dropping by 0.5%. So they're coming down very, very quick in New Zealand, which is good. Well, good for them. So the current rate we're sitting at 5.25. Inflation is still very high, up at 3.3, but it's coming down at the fastest rate of everybody at the moment. So yeah, it's coming down very, very quick, which is why they need to get this down fast, because they don't want to overshoot, as some people have done, because they didn't drop the rate fast enough. So that's potentially going to give us weakness in the New Zealand dollar on Wednesday. But the thing that's going to be important is this rate statement here, which is going to lay out what they're going to do future-wise for interest rates. So this is where we're going to get the movement rather than the rate, unless the rate comes out different, obviously, and then the market will go crazy. But as you can see with the New Zealand dollar, we have kind of been factoring that interest rate drop in anyway across most New Zealand dollar pairs. It's not particularly weak movement, but it's not been strong. So the market's kind of been expecting a drop to come. But we might get, I think, a stronger movement when the rate comes out, because it hasn't been a particularly strong movement into the interest rate. So we'll see what happens. FOMC is on Wednesday as well. That is just the FOMC meeting minutes. It's not a rate. It's not a press conference. This one tends to be very whippy, but they might say something crazy and it might go mad. So you need to be aware of that. US dollar CPI, this is probably the second most important figure for the US at the moment. We are forecasting a drop in inflation. So obviously inflation coming down, interest rates coming down, everything coming down, US coming down with it. So we're forecasting a further drop on Thursday, on that. Unemployment claims, obviously important every week. Then we got the GDP for the pound and the Canadian unemployment rate on Friday, as well as the PPI figures. So busy week, but doesn't start until Wednesday. So front end of this week, probably going to be very, very, very slow. Morning, Themba. So there's your news coming up this week. Over weekend rather, news. Not a lot. Mainly focused on obviously what's going on in Israel. There haven't been any more runs into safe havens. There hasn't been any more disruption on oil at the moment. Yeah, we need to be keeping a very close eye on what's going on over there, because that could explode. Interesting that Elon Musk turned up at the Trump rally. Didn't realize he was such a strong Trump supporter, but I suppose if They've got Taylor Swift. You need someone to combat that, don't you? So yeah, that was interesting. So other than that, over the weekend, no real news that affects the financial markets. We finished on Friday with what's the news on Friday? Brain's gone. Yeah, obviously non-farm employment. So non-farm on Friday. Let's go back to hourly. So as you can see, non-farm on Friday move up and pull back there. US dollar Swiss, big spike up. US dollar yen, big spike up. So the market liked the non-farm figures. Obviously, everything came out positive. Unemployment came down. Employment rate went up. Everything's positive US. However, they are dropping the interest rates. So that is probably, I would say, going to be a mean reversion opportunity. So if you did take any US mean reversion based trades on Friday off of that move, I suspect today we might well get a little bit of a pullback into this propulsion gap. But we'll wait and see what happens today. Obviously, there's no news, so there's no drivers today to get this kick started. So we'll just wait and see what happens today, but no forecast moves. AZ took a CAD yen short last week. Now in 2 on it. Yeah, yens. Yeah, I mean, I would expect that to get done today, to be honest. Well, it's, you know, look at how long that one took to undo. You might take a while, but I mean, it should come back down. The thing you've got against you with this at the moment, this is a very tricky pair. With everything that's going on in the Middle East at the moment, the Canadian dollar is going to get affected by oil prices. If it all kicks off in the Middle East, oil supply is going to be disrupted. If oil supply is disrupted, the price of oil goes up, Canadian dollar will rise. If it all kicks off in the Middle East, safe havens will get run, which is the yen, which means the yen will rise. So you've got a pair here which is affected by the Middle East. CAD will go up and so will the yen at the same time, which means it's whoever's the strongest will get the advantage. That you're never going to tell until it happens. So it's a bit of a tricky one, CAD yen. But I think they'll probably undo this because this was off the back of non-farm payroll. And yes, we were expecting the rates to the unemployment rate to come down, which it did, which puts further pressure on reduction in US strength, which means CAD will come down with it. So no reason why it shouldn't undo, really. Markets this morning, DAX clean break to the downside. FTSE no pre-market trade. No opening range trade on the FTSE. Why have I not got a trade on the FTSE this morning? Short on the DAX. Why have I got no trade on the FTSE this morning, Mr. EA? What am I doing in there? Oh, that's the 5-minute ORB, isn't it? Sorry. Is it? No, it's not. Sorry, one sec. Let me just check this. That's the DAX. Why is it not? Why is the FTSE? So it's like the FTSE's not there. Oh, I've got an open trade on it from Friday. That's why it's not traded. It's sitting in 900 and drawdown. Why have I got half a trade on from Friday? What happened on Friday? Can't remember. Okay, so I need this to go short basically today. Thank you. It's going the right way. So if you did take, I didn't realize, look, there's a trade on. I'm running a development version of the SIH, and I think I know what I've done with it. I've got some logic in there that I changed last week, and I think it's ignoring re-hedges. Ignore me, I will fix that later. But it doesn't help that I need to get short today. I should have checked that on Friday. So short, there you go. Always make sure you close your charts on a Friday, everybody, and check your trades. So shorts on the DAX. Nice clean break down into there potentially today. Obviously, the DAX is short. The stock market is shorting because it's worried about what's going on in the Middle East. So if you did take the pre-market on the FTSE, that range was correct, I think. Let me check. 151, yes. So you would have been able to get into a pre-market on the FTSE, which means you would have broken short. You're down at 1R at the moment at the pre-market lows. So all good there. Morning, JC. Morning, XR. Update.news. How we doing? So this morning in the members streams, which start at 9 o'clock, it's price action week this week. So we're covering, I did put a little post out about it in Discord and Telegram, which is, I can probably open that in here. Look, there we go. There we go. So that's what we're covering this week. So today we're doing understanding how and why the market moves. Basically, what this is going to be is explaining everything you need to know about the mechanics of all markets, which is basically who moves it, why they move it, how they move it, where they move it to, and why they move it to those places. Understanding how auctions work in the markets, understanding how order distribution works, all that sort of stuff. So that's what we're going to be covering today, which is a very important part. You don't need to know it, but if you don't know it, you won't understand why things happen. So it's a little bit like driving a car. When you get into a car, they don't teach you when you do your driving license how the engine works, because it's not important. What they teach you is when you put the foot on the accelerator, it goes forward. When you put your foot on the brake, it slows down and you can go in reverse. Yeah. You don't need to understand how the market moves to trade it. However, if you do understand how and why it moves, you'll understand what you're seeing in more detail. So it's about understanding the mechanics of the market. We're also then going to go on to do price action this week. So we're going to do some price action trading, look at candlesticks and the three outcomes of candlesticks, candlestick patterns, and identifying trading levels and when you shouldn't be trading. More importantly, this is the most important part really, when not to trade. Yeah, the reason people get trades wrong is because they get in at stupid places. Yeah, there's a place and a time to get into markets, so it's identifying really when not to trade. The rest of it is pretty easy. And targets for price action, and why the targets work, which kind of links back to how the market moves and works. If you know how the market moves and works, you'll know where the movement is likely to occur. So it's basically, this week is following on from last week, is just basically explaining everything you need to know about price action. So if you're interested in scalping or interested in anything, basically understanding how this thing works and why it works, member streams this week. Right, so today we're going to do a little bit of analysis on all the FX pairs. At the moment, there's no ADRs to look at. Obviously, there's no weeklies. It's Monday morning. There's no monthlies to look at because we haven't had an awful lot of movement last week. So therefore, there's no monthlies hit at all. So there's nothing to look at on ADRs, AWRs, or monthly ranges. RSIs, we had quite a lot of extensions on the hourlies towards the back end of last week. They have all started to undo themselves, as you can see. So any positions you got into last week, initial ones will probably have already started to play out. The only things I took new last week were the New Zealand CAD and the Euro CAD. Yeah, Euro CAD was early last week. Didn't manage to get anywhere with it. I was toying with the idea of closing it out before the news, but I didn't. So there we go. Need to draw down on that one. New Zealand dollar CAD as well. I'm in as a second position. So obviously the Canadian dollar rallied last week with the US. So average is all within ADR and everything. So it's all fine. Aussie dollar Swiss I've been into for a while, as you can see, because it's not going anywhere. So that was the initial entry. And since the initial entry for 2 weeks, we've gone totally sideways. So I'm waiting for something to happen in the Middle East, basically, which will rally the Swiss. But there's not a lot of news this week to move stuff. So we'll see what happens. But that's all I'm in, basically, this week. H4 RSI extensions. The Euro US dollar is obviously very extended at the moment on the 4-hour. Mainly because we were extended when the news came in last week, which has obviously taken us right over the edge. So these extensions above 80 and below 20 on the RSI 10, RSI 14, very good elastic band theory trades because the market is incredibly extended and it needs to mean revert a portion of the move before it can continue. Partly what we'll be covering today, how the markets move, why they move, the mechanics behind why this is going to do what it's going to do next. So that's basically the 4-hour RSI extension at the moment, and obviously New Zealand US, and I'm in that one as well. So big extension there, look, on the 4-hour. So we've gone the entire week, basically, from when we opened last week, New York session on Monday. Since then, absolutely parabolic, hasn't stopped. They are absolutely exhausted. So one of two things is going to happen. It's pretty much the same as this move here. Look, we're either going to accumulate, rally again and then undo it, or we're just going to undo it. So it's either going to be this week and then getting out next week, or it's just getting out this week. So same as this. Look, just going to get that pullback, or you're going to get that continuation, one or the other. Market structure's long. Yeah, so and US dollar obviously should be weakening. However, New Zealand dollar rates this week. So there is a chance for this to come down this week, obviously on that New Zealand rate, but we'll wait and see what the statement says. So those are your H4 RSI extensions. So opportunities for longs if you're not in those two. We've also got US dollar CAD and the Aussie, couple of Aussie pairs which are getting extended. Aussie New Zealand we looked at last week for an opportunity. It's just coming up. There again, my alarm has triggered, which is there. So that was my alert. And we are at it. So let me just delete that alert. Oh, it's gone, I think. It hasn't, there it is. So yeah, lovely level on Aussie New Zealand. Look, so we're coming up to the monthly high from 2 months ago. Which is this propulsion move, which is this previous support. So support turns into a resistance, and we're retesting that for the first time. So we're likely to see limit order triggers again, which is something we're going to cover this week. Limit orders triggering at this level. If not, then you've got a run up to about 225 to 250 ADR from where we are. So short entry, potential 2 entries further. By the time you get there, you are extended on that entire leg. That sort of size of leg, which is when you're going to get that pullback. So it's either going to go from here and pull back potentially and continue, or it's going to get all the way up to there, and then obviously there's a pullback from there. So one or the other, but nice extension, nice M pattern, nice divergence. Really good looking setup this. So I had the alert set at that monthly high. So today, this is worth watching. So drop down M15. There's your monthly level. So looking basically for a reversal here. So looking for sellers to step in at the monthly high, defend that zone, which will start a pullback. So if the buyers can't get through that level, they'll have a go, they'll have another go. If they can't get through, they'll stop and reverse and flip back in the other direction, which means the sellers will then get alerted. The sellers will then add to that position, and we get that climbing up the stairs, falling down the elevator shaft scenario, which is the profit take move. So good looking short opportunity, Aussie New Zealand. I'm on this already, basically. So my exposure is already short Aussie and long New Zealand, which is basically hitting the short button Aussie New Zealand. So if I do get into this one, I'm double exposing myself on the same position in effect. So I'll see if there's any other opportunities, but it is a good looking short, that one. The only danger we've got with this, obviously, is this week we've got the New Zealand dollar interest rates coming out on Wednesday early morning. So you've got to be careful with New Zealand trades this week. We've obviously got the Aussie monetary policy statement tomorrow morning as well. So we've got 2 Aussie New Zealand back-to-back days of news this week, and it's a bank holiday today, so obviously didn't do much in Asia, but good looking opportunity for short there. So if anybody's got any pairs or anything they want to discuss, let me know. Other than that, I'm just going to whiz through all the pairs this morning and just see if there's anything exciting coming up. Nice clean breakdown on the FTSE. So 3R hit on the DAX, 3R hit or 2R hit on the FTSE. I'm just going to close out that FTSE down there because this is a hangover trade. I made money on the FTSE on Friday on what was closed out. So that's pretty much going to break even because it's about 500 profit on Friday. So that kind of break evens me on that one. And I've got 700 profit banked on DAX this morning. Coming down hard. Just make sure we haven't had any news just come out from when you see the market selling off this hard, it's usually because there's some kind of fear going on, and obviously with what's happening in the Middle East at the moment, this is kind of the scenario at the moment. The stock market is going to be jittery. There's the hedge from Friday on the DAX. So I got hedged at the open, took a 5R, aggressive drawdown, control exit down to there. So very nice profit. I think it was 400 and something on the FTSE, on the DAX on Friday, and the same on the FTSE. So that closeout this morning has cancelled out the profit from Friday on the FTSE, but obviously the DAX, nice easy trade today. So 340 banked, trailing stop. See if we can get that 5R, which is ADR today. So it's coming down very hard. So I'm just going to let that run today and see if we can get a decent runner on it. Nice clean break. Easy money. Big swaps on the FTSE over the weekend? No, don't really get two big swaps on Darwinet. Oh, it's positive. Yeah, positive FTSE, positive swap, 23 £23 positive swap. So I made 46 quid holding it over the weekend as well. Always good. I very rarely, that was a real cock up, that was. I never hold indices over the weekend, never. That was a cock up. I had stuff going on Friday and I had to go out earlier than anticipated and I didn't get back. So normally, the EA would normally handle the closing, obviously, and everything for me. But I shut my terminal on Friday, so the EA couldn't manage the rest of the trade. And then when I rebooted it, when I got back, this development version didn't detect that trade. Look, complicated story. It's not the SAH version that you'd be using. It's the development version, which has, let's call it messy code, which I class as development code, which wouldn't have identified that trade because of the way it was added. So that's why it wouldn't have closed it. But it's not a problem. Luckily, if we'd have gapped, then it would have been a problem. The other thing is, obviously, gaps at the moment on stock indices are very more than likely going to be down. So if you do ever hold over, I would never recommend holding indices over weekends because you do get big gaps. But at the moment, gaps will likely be down because it's going to be panic selling and stocks are dropping with panic selling. So yeah, but that was lucky today. On the 15-minute pre-market DAX was so fast I missed it. Yeah, so pre-market 15 today. So that was there. Pre-market 20 for me on the SAH. The SAH uses dynamic identification of pre-market, whereas the opening range breakout uses a specific time frame, amount of time. SAH dynamically adjusts based on minimum maximum range, so it's a bit more advanced the way it detects. But yeah, 20-minute range, but it doesn't matter which you took, 15 or 20. However, as you can see, there's a gap down at the open there. So that candle was very, very fast, meaning, oh, you're going to annoy me now and get back down to where I got out, why don't you? Anyway, but yeah, you get, yeah, I mean, if that broke too fast today for your broker to get the trade on, broke too fast. There's nothing you can do about it. So we're just testing this weekly low at the moment on the DAX. So a weekly high from, looks like 3 weeks ago, 2 weeks ago. So there's a 2-week high. We haven't retested it. We blew straight through it. It did come back there. Then it just chopped around. So it's not a particularly good support. You will find orders at that level because last week they broke that level. So anybody that's taken a breakout weekly will be looking to defend that level because that's where they're in. So they'll be adding at that level. However, Friday, obviously, we broke down Thursday, Friday last week below that level. So I'd kind of say that's probably a little bit more invalid. But we'll see. Market seems to be holding at the moment. So we have got some order volume coming through there, but we'll see. We'll be talking about this today. We'll be looking under the hood. We'll be looking at this today and explaining why what is happening here is happening. So, whizzing through all the pairs. Aussies we'll start off with. What's time? 1:30. If there's any pairs you want to go into any more detail, let me know. Other than that, I'll just whiz through them all. I'm going to start off with all the yens. Because I'm still in the same boat on the yen. I have no idea. This thing at the minute is kind of gone back to a more volatile version of what it used to be. So in the run up to the intervention, you can see the candles were very tightly compact and very grindy. Then we got the intervention. You can now see that there's more ADR. Yeah, so it's moving a lot more intraday than it was previously. It was very, very tight. Now it's got a little bit more movement in it. So we've got more volume, more volatility on all the yen pairs at the moment. Whoops. But direction-wise, it's still very, very difficult to call because we don't know how the market is now going to react to the yen becoming... getting on top of inflation, using interest rates to control inflation. It's changed the way it's economically working. Overseas bond purchases aren't happening the same as usual. So it's just a case of now looking at the yen and thinking, right, what are you going to do? How are you going to move? And we don't know at the moment. There's not enough information really to decide because all we've got since the intervention is what the hell do we do next type price action from the market. So it looks to me as if they're not particularly happy with it. Obviously, it is still kind of weakening across the board. Even though all other currencies are weakening, we're still seeing again excessive weakness coming into the yen. So it's very hard. The market's always used the Japanese yen as a carry trade because it's always had positive swaps. So you've always got that market bias of long on it because they make money by holding positions against the yen. Which is what the market's always wanted to do. It's a trend monster. The yen has always been one of those instruments that just tends to trend up more than it doesn't. Yeah. So if we're going to go back to that, this is where it's going to start. But look at the price action, and the price action is a lot more volatile now. So it's very difficult to call. It's the sort of thing I wouldn't mind trading intraday, maybe intra-week. But position trading, still, I'm not convinced I want to be in this. So it seems to be moving quite nicely from a market structure perspective, but very slowly. Yeah. So anything you get into on the yen at the moment, the more likely movement is going to be caused by the cross. So if the cross has a bull move or a bear move, it will move obviously against the yen in that way. It's unlikely that yen is going to be the driver. So it's kind of a neutral currency, I think, at the moment, and you'll be pushed around by the others. So in theory, because everything is coming down, you would expect the yen to go up, which means that everything should be really a sell against the yen. but it's not got any strength. So it's really, really, really neutral at the minute, as you can see. So you're getting the odd grindy week and then just chop, chop, grindy week, chop. Yeah, very hard to trade. Extensions wise, it will give you signals. So in theory, if you can see here very clearly, that worked beautifully, that worked beautifully, that worked beautifully. There's a short on now, which is working. So it's working. However, I'd much rather just be pressing the long button on it. However, from a Middle East perspective, I'd much rather be pressing the sell button on it. So it's one of those currencies at the moment. If it kicks off in the Middle East, everything is going to collapse against the yen because all the money will drive into the yen. If it doesn't kick off in the Middle East, this thing's probably just going to continue to grind to the upside. It's an absolutely impossible thing to predict at the minute, in my opinion. So I'm just not getting involved. If I see something really good, like the Aussie yen that I took here, I will take it. But I'm only going to trade one yen pair, and it needs to be a really good setup. I want to see a really good support resistance level. I want to see a really good extension for some reason, like way above 80, way below 20, like a really strong move that is unlikely to be sustained, to be able to get involved in it. So all the ends at the minute, really, I think for me, are just kind of watch and see what happens with it over the coming weeks, months. Because we don't know what's going to go on at the minute. We've got lovely resistance levels coming up at the moment on a lot of these here. So you got your last month's high, previous month's high. That's a propulsion move, which was a break of that area there. It's holding at the moment today. So there's a good looking sell opportunity there. But it's just not good enough at the minute for me. So I'm leaving the yens at the present. We've just broken out of that Swiss yen. Look. CAD yen was just broken out of the monthly highs as well. So there's a chance that this might just continue to grind away this week and just push to the upside. But that US dollar yen, this is the one that it's within ADR actually today. Look. So this is the level that I'm interested in on the US dollar yen, the 150. This is the previous intervention level from 2022. No, 2000 where was that? Yeah, 2022. Yeah, so this is the previous yen intervention from 2022. This is the 2024 intervention. This was the 2023 intervention. Again, 150, around 150, 150. This is the level that the Japanese have always said is the point of no return. If we get above here, it becomes uneconomical for us to sustain trade relations with the US. We're back there. So as you can see from where we are now, it's kind of not quite a 50% pullback, but it's, you know, it's a decent pullback for the Japanese to then start to try and drive some money back into the yen. So that area I'm watching at the moment. But if you take a short there and it doesn't work out, and it does tend to go back into the old cycle of the carry trade, you could be stuck in it for days, weeks, or however long. And if you are shorting it, you are paying swaps, and the swaps will eat all profit. So it's a very hard trade to take, that short against the yen. If you look back historically, you know, it used to be something that was tradable. It was normal market structure along with everything else. But since we've had COVID, yeah, it's just been destroyed. The Japanese economy is just not there anymore. So it's difficult to tell whether or not they are. This is that now. This intervention, and obviously coming in here, this is where they change their interest rates to positive, which we haven't had for 2 decades. Yeah, so there is a massive change in the economy and the way that they operate the yen. So it's difficult to tell whether this is going to continue or not. But that level there is where the Japanese usually start to scream and shout. So what I'll probably do this week is watch closely that 150 level, see if we get any price action around that level, and obviously keep a very close eye on financial juice and see if the Bank of Japan start to complain about FX movements. Yeah, the usual stuff. There's a lot of talk comes out of Japan every night. Oh, here we go. Look, it started already. I missed this one. There we go. So examining closely the FX market. They're keeping a very close watch on this 150. They always do. Yeah. So that might be a good level for a short. It's kind of a hybrid trade. Yeah. It's not turning it into a position trade. But it's the sort of thing, if it just continues to grind, I've been taught a lesson many times by the yen over the last year. Don't hold it too long. It's one of those you want to cut. And to be honest, at the moment, the market's fairly slow and I'm not getting an awful lot of positions on. So having to cut something just because it looks like it might grind for a month and costing me 2 or 3% isn't really something I want to do. But we'll see. But watch that level. So there's your yens. All the Aussies at the moment. So fundamentally, Australian 4.35. They're not changing interest rates. They haven't managed to change interest rates. They can't because they can't get control of inflation. Inflation is the highest out there at the moment. It is going up, not down like everybody else's. So they're in trouble. Their unemployment rate at the moment, thankfully, is sticky. So if that starts to go up, they're even in more trouble. Their GDP is not moving yet. So Australia is stuck, stagflation type thing. So the market isn't particularly interested in buying the yen, the Aussie massively at the moment. But as you can see, it's not particularly bearish on it either. So it is bullish because of interest rates being high and them not dropping, but it's not going to be bullish for long because they are going to need to do that at some point, that drop. So potential head and shoulders pattern forming at the moment. So look for a retest up here somewhere potentially. But yeah, so good looking long opportunities at the moment, really. Nothing. There was an entry on Friday actually down here. So you had a long opportunity there, Aussie CAD. Aussie Swiss, absolute mess. This is the one that I'm in at the moment. It's just stuck sideways totally. Aussie New Zealand, good opportunity for a short. However, this is going to be the news this week. It's tomorrow morning and Wednesday morning is interest rates and bank statement. So yeah, really like the look of it from a technical perspective. However, we've got two fundamental events. Technicals are completely wiped out when fundamentals arrive. So yes, it's the beautiful, lovely short. However, if you get in on the beautiful, lovely short as New Zealand decide to drop their interest rates by 0.25% more than expected, that's going up. And it ain't coming back for a bit. So it's a good looking technical level. And it's also extended and embedded up there on the 4 hour. So lovely divergence on RSI. You know, it's got everything going for it. M pattern. It just looks beautiful. And it's fairly range bound, isn't it? Yeah, it's fairly range bound at the moment. So makes sense. And it's a really nice, easy position trade. If I didn't have Aussie and New Zealand exposure on already, I'd be jumping all over this. So it does look good as a short, and I might still take it. I'll see. If I get out of anything else this week, even today, if we got a run on the Swiss franc today, for example, to ADR, I would be out of the Aussie Swiss, which means I can easily take that Aussie New Zealand short. I just need something to move, but the trouble is we've got no news. So, but yeah, so lovely looking short on that one. Aussie US market's long at the moment on it. So looking for a continuation. US dollar weak, Australian dollar long. No reason why you shouldn't be long in this one. It's an RSI extension to the downside. That hedges me on the Aussie. That's the only trouble. That's the other trouble as well. I mean, it does hedge me. If I go short Aussie New Zealand, it's hedging me on the Australian dollar because that is a much nicer trade, I think. From a market structure perspective, if we're going to continue that weakness in the US and the Aussies aren't going to drop their rates, there's no reason why that shouldn't be doing that at all. So that's a lovely looking entry. Obviously long Aussie US. However, we need to see if they undo this. Very strong move on the US on Friday on those numbers. So we'll see what they do this week. Trevellery, in January 24, I was selling pound yen, lost 2k using martingale. You will, yes, probably would using martingale. So yeah, hopefully hoping for a recovery. Yeah, don't use martingale basically. It's very tempting. Yeah, whenever I do any testing, I always test martingale on strategies because it works really, really well until it doesn't work and then it blows your account. So it's the type of thing you can use to quickly double an account, but understand it's gambling, not trading. Yeah. So there's a very fine line between gambling and trading. Martingale is definitely gambling. It's a gambling strategy. However, it can get you out of problems very quickly. If you look at what we do with aggressive drawdown control, is in effect a style of martingale, isn't it? So my aggressive drawdown control is usually 75% of open position. So if I haven't got anything anywhere near needing it at the moment, but if Aussie Swiss, for example, was getting way too extended, I had 6 positions on it, was in 4% a drawdown, and I had 8 lots on it, I would be taking somewhere in the region of 6 lots as an aggressive drawdown position. But what I'm not doing is hoping. I'm getting out. Yeah, it's aggressive drawdown control is a stop loss strategy based on position trading or your position. So basically, normally what happens with martingale is 8 trades and you're dead. Yeah, if you get 8 trades go against you with martingale, usually you can't get the 9th on. And it obviously depends on the lot size and the initial risk, but typically a losing run of 8 is death. If you've got any kind of account that is 1 to 30 to 1 to 50 leverage, you wouldn't even get there most of the time. But to get a losing run of 8 trades is quite unusual. Yeah, it's not unusual. It does happen, but any back test will show you the maximum and the biggest losing run, longest losing run, and the time between losing runs, etc. And you will get them. Yeah, because the market just will not suit the strategy you're trading. When the market conditions are not right for the strategy, you will lose money, and you will lose money over and over and over again. If you try to apply a range-bound strategy to a trending instrument, it will continuously lose money. If you try to apply a trending strategy to a range-bound instrument, it will continuously lose money. It will only last a certain period of time before it reverts to the strategy's required market condition. Then you start making the money. So what your martingale strategies are doing is going, well, it can't last forever. Can't last forever. Yeah, look at the Aussie Swiss. Can't stay in a range forever. You can't go sideways forever. It just can't carry on doing this. Can't do it. Look at the euro pound. Can't do it. Can't just stay range bound forever. Yeah, can't stay there. Can't stay there for 12 weeks or whatever. You can. And if you're using a trend strategy there with martingale, you're dead, basically. That's it. Game over. So it works really well. And the problem with martingale strategies is people test them over a short period of time and go, oh, that's amazing. Then go and test it over a period that is not right for the strategy, and you will see it's not amazing. But that's how you learn. I've been there. I've done it. Everybody has. Right, Canadian dollars. So we covered the Aussies. CAD Swiss specifically stuck sideways at the moment. So the Canadian dollar at the minute is very much going with the US, which is weak. So weak US, weak CAD. Swiss franc is a law to itself at the moment. It's a safe haven currency, and also they are manipulating it. So CAD Swiss kind of sideways at the minute, nothing exciting. Covered the yens. Euro, bearish. So Lagarde, very bearish on the euro, keeps coming out. Everything that comes out the ECB's mouth is bearish, which is fine. So all down on that one. Australian dollar strong. Yeah, so you got a bias on that one of bullish Australian dollar, bearish euro. Nothing but sells, as you can see. That's what it's doing. So looking for shorts on it. Any extensions to the upside, I shall be in short on it. Nice resistance if we can get 150 ADR this week from where we are up there. Good potential move. So shorts there. Shorts on all euro basically at the moment. I've got a long on euro CAD on this extension just because it was a very big 2-day ADR, and then we followed it by another almost ADR. So I've got long on at the moment just to mean revert that. If it doesn't work out, it's coming back down to here. So I'm fully prepared just to hold it until we get down to there. But yeah, that was a nice extension. It was a double ADR, an hourly RSI extension. It was at support on the double monthly. It was just perfect setup, just didn't work. So just goes to show, doesn't matter how good technical analysis is and how good the back test is. The market does what the market does. Nothing you can do about it. So holding one long on that one at the moment, but obviously more likely to be bearish. However, this one is a bear against a bear. So there is a chance that this one will just continue to do what it's been doing for the last 2 months, which is that. Or going into that sort of movement, which is absolutely fine. I'll be able to get out of that. Euro Swiss, very sideways at the moment. Not a lot you can do that one. Reset on ADR, on RSI. Not been too many opportunities on it. There was one up there and one down there if you're taking the 70-30s, but 70-30 extensions. Sorry, I've got not itchy nose. Because the heating's on, I think. Itchy nose, always eating. So sideways, 70-30 extensions always work well in range-bound pairs. It's very range-bound at the moment. So this one, there's no real bias either way. Euro Swiss is usually very contracted from an ADR perspective. It's not too bad at the moment, actually, but no real movement. Euro Pound, got out of that one last week on the pound drop. When Bailey said they were going to drop the rates. We've just pulled back into propulsion. Potentially that's what's going to happen. But that is a bear. That is now a bear when Bailey confirms it. So I would see potentially a return to origin on that, because that was a market overreaction to Bailey saying that the rates were going to come down. We knew the rates were going to come down. It just sounded like he was going to do them sooner than later. He has said nothing since. So the market's gone, well, when you tell us, we'll change our mind. He hasn't. And he's not scheduled to talk this week either. And the only news we've got this week on the pound is the GDP on Friday. So we'll see. But yeah, so out of that one, there was a short opportunity there. I didn't take it just in case Bailey came out and said we're going to drop it by 0.5% in October. You'd be off and not coming back. So that wasn't the case. So we're back here. So it's back to neutral at the moment. And it's really, really slow. It's just a slug, absolute slug. I've been stuck in this thing twice now over the last sort of 3 months. And it just seems that every time I get into this, it just takes forever to move. So not my favorite pair. Any big extensions I would be interested in. So if we do get any big extensions like that are not off fundamental news, potentially that would change the direction, I'll get in, but waiting. The rest of the euros, everything at the moment on the euro, you should be short. Bias from a long-term perspective, but short-term perspective, obviously it can do whatever the hell it likes. So at the moment we've got a bull move against New Zealand dollar. New Zealand interest rates are coming down this week, so this could continue to rally. However, Lagarde is dropping the rates fast, so it's a good spot for shorts. If it doesn't work from there, you'll be scaling in 175 ADR, so potentially 2 positions up and wait for a leg to come down. So I'm just wary of time because it's 10 to 9. Euro US dollar just broken out on Friday, so we need to see if that US dollar holds that move. But you've got a very decent support resistance in this propulsion gap here, which is where we are now. So this is where they're likely to buy back out of. It's a very big extension, good looking long opportunity on this one. I don't want to get too much loaded on the euro long at the minute. I've got EuroCAD on EuroCAD, Euro US dollar, very much the same sort of movement. So going to keep that as it is. Pounds. What's your current initial risk on H1M5? I use a $700, which is about 3/4 of, well, I'm not doing it that way anymore, but yeah, $700. So it's about 0.75% ish. But I'm trading less at the moment because I'm doing a lot more manual trading at the moment. i.e. manual initial entries. Position trader EA is taking over everything, but I'm just slightly adjusting my risk. But 1% over 1 ADR is the recommended. However, if you want to be more conservative and run more pairs, use smaller risk. Somebody contacted me on Telegram today, actually, this morning or last night. They've been running very much the same as Harold's been running in the Discord channel. 0.25% risk over 1 ADR on 28 pairs and just letting it continue to do its thing, because obviously you're getting in with much smaller risk, so you can go into bigger squeezes and last longer. So this sort of movement will get you into 2 or 3% with a 0.25% risk over an ADR, and he's killing it, absolutely killing it, 40% over a couple of months, which is great. But there will be a squeeze at some point. And trading all pairs, so it's just if you're going to overexpose, I keep talking about exposure. If you're going to overexpose, it's not a problem if you reduce the risk. If you take 4 trades on the CAD instead of 2, but you take those trades at 1/4 to 1/2% of what you 1/4 to 1/2 the size of you normally would take, you're not really overexposing, are you? You've got more pairs on. It's just a hell of a lot more to manage, so your workload becomes bigger because you're monitoring a hell of a lot more pairs. It's personal preference, it really is. There is no right or wrong way to do it. So 8 minutes. Let me just quickly check what's going on with the DAX. 3R stalled out. So that weekly is holding, look, on the DAX at the moment. What I'm going to do, instead of taking it, I'm just going to reduce risk. So either this accumulation here, so I'm going to lock in another £300. So I've got 340 banked. I'm locking 300 more in, so it's going to be 640 profit minimum. Either this accumulation at this weekly is going to hold and we're going to pull back, or this accumulation is not going to hold and they're going to break that weekly and flush. If they flush, we should get a run down into here, which is an ADR hit, which gives me my 5R target. So I'm just locking more in case this does hold this level. So that's nice trades today. Both of them would have been beautiful if I hadn't have forgotten to close out that Friday trade. Anyway, so pounds at the moment. So we had this move on Thursday last week on the pound. So Bailey said we're going to be dropping rates. There's an argument basically for dropping rates faster and harder, which is fine. We were expecting that to come. He said it. The market reacted, and then he said nothing about when it was happening, how big it was going to be. So this was a market overreaction to an anticipated move that they were expecting to come. We haven't had any confirmation of it. So you've heard the saying, probably, buy the rumor, sell the news, sell the rumor, buy the news type thing. This is what that is. We sold the rumor. There hasn't been any news, so we've gone back to where we were. So at the minute, that's kind of reset. So the pound is going to be bearish, and it should be bearish because we are going to drop rates. We are still too high on our interest rates. Our inflation has hit target, and it's bounced off of target, and then it's frozen. And the forecast is potentially for it to freeze again. So there is no reason why we can't drop this. They're not doing it. So we should be seeing bearish movement. So I'll be looking more for shorts on the pound pairs than longs. So any movements to the upside, I'll be interested in getting in down that way. Pound CAD, same thing. Shorts, you can see I had one there. That was a triple scale in and out on the news. Obviously, it went twice as far. But there was a long opportunity there on Thursday. If you took that, you did actually have an exit pretty much same day on that one. So that was nice. Pound Swiss, sideways. Swiss is really not going anywhere at the moment. Pound New Zealand, totally sideways. Again, we've got news coming up. So this is coming up to a beautiful resistance area for a short. Technically, brilliant. Take it. However, be aware, Wednesday, it could do that or that, because it depends what happens with the New Zealand rate. So it's a beautiful area to start shorting it, but the fundamentals potentially could shift on Wednesday. So be aware, but looking really good. Nice extension on the 4 hourly. We've got resistance. It's an area the market has held very well. So that's great. Yeah, beautiful tight range we've got. So you have to assume the market is going to continue to do what the market is doing until it proves you wrong. The market at the moment is telling you it's sideways. Continue doing that and assume it's going to continue to do that until it tells you it's not going sideways anymore. And it could be Wednesday. Might not be. So pound US, again, looking for shorts, but this is a difficult one because it is kind of like that. So the reason this has got bullish market structure at the moment is because we've had that weakness in the US. That potentially changed last week in the fact that we've had better than expected US numbers and we've had more weakness coming in on the pound. So this could be a structure shift. But it's the pound US dollar. You should really be able to trade this in either direction. It's constantly moving up and down, same as the euro US dollar. So it doesn't really matter which way you trade it. Even if both are going bearish, it's going to be nice structure as it does it. So there was a lovely opportunity for a long here on Thursday. And obviously it's not gone anywhere because the news went against it on the Friday. So you got a monthly coming up down there at 125 ADR. So if you took that one on last week, you'll be scaling into second position down here, and then you'll be looking at there's multiple areas, but could be that it does that. But I mean, the chances of it doing that entire move without a pullback, it's just, you know, it's not gonna be able to make that much movement before it pulls back on it and has a profit take in between. So this looks good for longs at the minute. The New Zealand's we kind of covered. I've got one long on New Zealand dollar CAD. Again, this is all going to be down to what happens with the news this week. So there's an entry there as a long. Already in on that one. New Zealand dollar Swiss, totally sideways like all the other Swissies. I'm in the Aussie Swiss, which is pretty much the same thing, just stuck at the minute. New Zealand dollar US dollar. Again, same as the New Zealand dollar CAD. So just take one or the other because the market structure is very much the same. Looking for longs on that one as well. So nice extension. Really, really, really good extension. If you look at this down here, was the last time we were down in this area. 2-week move, solid. We've had 1 week of that already. If it continues for another week down here and gets embedded, you're going to get a beautiful pullback on that. Yeah, it's going to be a nice, fast, strong move. So you can get into this now and position trade into it. You've got a monthly resistance coming up here at ADR, which is roughly half an ADR away. And the US dollar CAD and US dollar Swiss, you know, we're waiting to see what happens with the US. But at the moment, US dollar CAD, usually it goes sideways, so you can trade it in either direction. It's at the moment it's a short. Yeah, so at the moment it's a lovely short opportunity. And US dollar Swiss, very much the same. But that's coming out of a range, so potentially we've got a range break here. However, obviously the Swiss franc, you've got to be aware of potential strength coming through, which will drive that down if it kicks off in the Middle East. So there you go. There's all your pairs. RSIs, plenty of them last week. Plenty of opportunities to get into stuff. I'm just sitting waiting on these at the minute. So there we go. So member stream is about to start in about 5 minutes. We're going to cover price action today, this week. So today is understanding how and why the markets move. So we'll be looking in detail under the hood as to what makes this thing go up and down. What makes all things go up and down, basically. All markets. When I say markets, I mean everything. Everything you can trade, basically, is a market. So we'll be looking at all the mechanisms this morning in about 5 minutes. If you want to join the member streams, you can sign up. There's a button, join somewhere down there. And obviously you can watch all the replays as well. So if you sign up, so you'll have all the content that we do in the member streams. All right, so that's it for today. Anything else you need, I'll be in Discord. So you can contact me there. But as I say, today's going to be potentially fairly rotational. We haven't got any news. So when you've got no news, you've got nothing to move the market. So there will be price action, obviously. It's just a case of, are we going to get a lot of it? So it might be just gradual grinding today, but we'll see. At the moment, it doesn't look particularly enthralling, does it? But we'll wait and see. So keep your eyes on the ADR dashboards. ADR hits on days where there's no news are usually pretty good mean reversion opportunities, because if it's got there without news, it's probably going to do a reversal on it. So keep your eyes peeled on ADRs. All right, so have a good one. Anything you need, let me know. I will be in Discord. Other than that, I will see you tomorrow morning, same time. And if you're coming into the member stream, I will see you in about 5 minutes. All right, have a good day, and I will see you soon.